Hey everybody, welcome to the Finance Robo Show. This is our daily number episodes that we do every day, and today's daily number is $882 billion. That's the amount of stock buybacks that was brought by the S&P 500 companies in 2021, and that's also the highest or most targeted thing that's happening in Joe Biden's new budget proposal. But we'll get into that because he's not only looking to target stock buybacks, he's also looking to target the billionaire class. And what many people don't realize as they applaud this, that this is going to have some repercussions for the middle class as well. But we'll talk about that. I'll give you my thoughts. I'll give you some of my outcomes as well, and some ways to kind of combat this as we get further on into the episode. All right. So listen, my name is Kamari Ellis. I'm a tax accountant. I do taxes by day. I'm a financial educator by night. This whole channel is all about money, right? Stocks, taxes, economics. If it's about money, we talk about it right here on our channel. So again, today we're talking about Joe Biden, his new budget proposal. It's going off with a bang, but it's kind of what Joe has kind of always done, right? He has been promoting this whole thing of attack the billionaire, attack the wealthy class, and it's kind of to be expected. It's kind of to be expected, right? So you got to keep that in mind. You got to keep that in mind. But as we get going into our show, we had to do our stock market rundown. And as always, we're going to talk about what's going on in the S&P 500, right? What's going on with gold, what's going on with oil and the like. So let's get right into it. All right. So today, the S&P 500 closed at $4,631, up a little over 1.25%, 1.3%, right? The S&P 500 right now is down 2.82% year to date, a little under 3%, but the S&P has been kind of fighting back, right? A lot of folks, a lot of investors have not been that worried about Russia and Ukraine because Russia has been pulling back from Kiev, Ukraine's capital city. So they're expecting that some of these peace talks that are going away will make some progress. All right. Oil has, oil dropped below $100 per barrel today, right? But it closed ultimately at 105.60. Again, we're coming back from that $130 level that oil hit at one point. So this is a good thing. So hopefully these talks will go on. Peace will resolve all of this, and everybody can go back to living their life without being on the edge. Okay. All right. Looking at gold is at 119.90. 119.90, a little up today. Gold still up 4.67% year to date, but again, it's coming back down from that 2000 level that it hit. We're starting to see more stability in the market again as these peace talks come into play. Now, let's look at Bitcoin. Bitcoin's been running. Remember, I've been talking to y'all about correlations, right? Bitcoin's running 47,211, $47,211. Again, Bitcoin has been up. This number here is kind of a down number, but that's representative of what just happened recently. It's not Bitcoin's number throughout the day. So Bitcoin had a great day today. Bitcoin is now in positive territory year to date. We're at 1.92%, almost 2% year to date. So Bitcoin still has got some traction, right? So as we get ready to talk about, basically what I'm calling is Joe Biden trying to kill the middle class. I appreciate you all if you share this out, right? If you enjoy this content, do me a favor, subscribe to the channel, share this out, and also like the content as well. I'm fighting the algorithms. This helps the algorithms know that, hey, people actually indeed like the content here. So if you like it, if you enjoy it, do me a favor and like like the show, like the video, and share it out. All right. So let's get to it, y'all. Let's get to it. I have a couple of stories for you. Proposed tax, what his new proposed budget is looking for as we go forward. So let's take a look at this real quick. So Biden basically has proposed a new $5.8 trillion budget. That's the annual spending amount for the United States government, the United States federal government. And in that new budget, he's proposing a lot of tax hikes. But we all kind of knew that. We knew that was going to happen. So I'm not surprised. But again, I don't think people realize that every action has an equal and total opposite reaction. So Biden's going to go after the middle class, but he's not necessarily thinking, Biden's going to go after the 1%, the wealthy class, but he's not necessarily thinking about the middle class as he goes after these endeavors. But let's talk about this. So companies are spending more than ever buying their own stock, right? We all know this. So that number I gave you earlier on, $882 billion, that is the amount that S&P 500 companies used to buy back their shares of stock in 2021. Now, what is a stock buyback, right? What is a stock buyback? A stock buyback is anytime a company, a publicly traded company, takes their money that's in their bank accounts, in their pocketbooks, in their wallets, and they say, you know what? We want to return shareholder money to them, right? Because shareholders have put their money up. They've said that we believe in this company. We're going to invest in it, whether it be early stage or maybe sometimes just last week. But we are going to return profits back to our investors. Okay, so that's a share buyback. What happens oftentimes with share buybacks, though, is that these share buybacks help keep the stock price higher, appreciated, inflated, whatever you want to call it, it's at a higher number. And so a lot of times, because that brings in a buyer in the market. Remember, the stock market is a great auction, right? I'm always talking to you all about economics. So it's all about supply and demand. So when you're coming to buy, you are bringing more demand to the marketplace. And so that means you have more buyers. When you have more buys, it ultimately pushes the stock higher. That's a big reason why stock prices have been so high for the last 12 years in this bull market since the Great Recession, because we've had a lot more stock buybacks. And right, that was evidenced by the article we were just talking about. And so as these stocks continue to go higher, the market goes higher, things get better. And here was reported on CNN, it says last year companies in the S&P 500 repurchased a record $882 billion of their own shares. That number is on track to reach $1 trillion in 2022, according to new data from Goldman Sachs. All right. So I'll spare you all of this, right? But the White House has proposed new rules intended to curb stock buybacks as part of its $5.8 trillion budget plan, which the White House released yesterday on Monday. The plan will require company execs to hold on to shares of corporate stock for a certain number of time and prohibit them from selling shares for a certain number of time after a planned buyback, right? Doesn't sound too bad on the front, but what many are not thinking about is that why would execs continue to buy this if there are more regulations around it, all right? But let's keep going through this article, right? Executives sell more shares in 8 days following a buyback announcement from their companies than in any other time, according to SEC data. Repurchases that have made up an increasingly large chunk of corporate profits over the past decade. Corporate stock is owned largely by wealthy Americans. The top 10% wealthiest U.S. households by wealth own about 90% of corporate equity. Okay, so by kind of prohibiting, kind of limiting some of these stock buybacks, they're trying to steady or slow the flow of profits back into investors' hands. And I get it. I get what they're trying to do. I do think whoever came up with this law was a little bit short-sighted, but we'll come back and we'll talk about that a little bit later. We'll talk about that a little bit later, right? Now, here's one of the things that many folks don't realize. Many of the reasons that stock buybacks have been so prevalent because interest rates have been so low. So the Fed has kept interest rates so low to keep the United States economy out of recession. And this isn't just this year during COVID. We're going back at least a decade or more. Let me take off these glasses. A decade or more. And so corporations who typically have the best credit rating have the most access to capital, not just from banks, but also from investors, also from other pension and hedge funds, things like that. They have the gateway. They have the key to the gateway to capital all the time, not to mention the bond market. So they have resources to go back and tap these resources to get cash, whether it be in a loan, whether it be in an equity raise, and then they are able to buy back the stock, which keeps it higher. And I get it. But I do find it ironic that the United States White House, the executive branch, the president, is so worried about this, but he hasn't been worried about low interest rates over the years and months and decade. But again, our elected officials are not super duper qualified in the fields of finance and economics. But hey, what do you have to say? What do you have to say? Now, I do want to show this just to be fair, right? So in March, Amazon announced that its board had authorized the company to buy back up to $10 billion worth of shares. A move greatly encouraged by Daniel Loeb, whose company Third Point held an Amazon stake valued at $784 million at the end of 2021. So here that's showing how much of the investor / wealthy class are able to push and manipulate things to their benefit. All right. In 2014, when Carl Icahn held about $5.3 billion in Apple, or a 0.9% share of the company, he regularly demanded buybacks. And so if you guys don't know who Carl Icahn is, you also know he's one of the corporate raiders, one of the quote unquote, what do they call them? Not evangelical. He's an evangelist he's an investor evangelist. So he always is pushing and promoting for investor value. He wants companies to return back investor values. All right. So we can see that happening an awful lot, oftentimes in these things. Now, this is just one area, like I said, in Biden's plan where his attack on the wealthy class is going to come back and have undue or unthought of ramifications on the middle class. All right. But like I said, we'll come back and we will talk about that in a moment as we get through this. Now, I wanted to point out a few other things about this plan as it relates to taxes and where the plan is going, right? Where the plan is going. So here's another article from the Wall Street Journal, and this is from the editorial piece. Now, full disclosure, Wall Street Journal is owned by Dow Jones. Dow Jones is a heavily right-leaning organization. So I know many of these organizations are supposed to be fair and balanced, no pun intended, are supposed to be objective when they're writing, but you can't help to think about, are they really objective in this? Because they're already right-leaning. They already come to this with a certain amount of perspective and thought from a right-leaning ideology, okay? So here it says, all right, we told you on Tuesday about his new tax on wealth and capital gains. If you don't sell the asset, this is supposed to raise a cool $361 billion. So this is another part of this new budget plan that Joe Biden has proposed. Now, for the record, this is not law. This is not law. This is just what Joe Biden, the White House, has proposed. It still has to be approved by the House of Representatives along with the Senate, right? And then they send it back up to the president to sign off, and then it becomes law. But we all know there's a whole lot of hoops and hollerings and arguments that happen way before any of this gets way back to the president. All right. But again, as we talk about this here, one of the things that the president wants to happen is raise the top income tax rate to 39.6% from 37%, and that would raise roughly $187 billion, raising the capital gains tax. All right. Right now, capital gains is as low as 0%. And this is one of the reasons why the wealthy are able to make more money or spend less in taxes than your average everyday 9-to-5er. Okay. So this is including taxing capital gains like ordinary income. So if you tax ordinary gains as ordinary income, then the top rate on cap gains could be 37% or 39% as they're proposing. So that could all come underway if this thing comes into law. All right. Now it says earning more. So they want to apply this tax, this penalty to anybody who's making more than $1 million, right? Earning more than $1 million. And this other new tax was if people made or worth, right? Because there's two components. It's an income component and there is a wealth component. And part of the issue is there is an income tax. There is no wealth tax. So that's going to be another hurdle that's going to have to be cleared in doing this. But that's what the president is proposing right now. And so he's proposing that for anybody who $1 million or more, you have to pay this new top rate of income tax. Also, the other thing that the president is proposing, that there is a 20% wealth tax on anybody who has more than $100 million in assets for 3 consecutive years, or who is clearly worth $1 billion. All right. So that you got kind of two levers there. On the income side, anybody who makes more than $1 million a year, top rate of income tax goes higher. Anybody on the wealth tax side, right? Anybody on the wealth tax side, which is the 20% of the wealth of whatever it's capital gains or any other assets you own, they're going to tax it whether you sell it or not, because currently right now, capital gains, you're not taxed on it until you sell. This new tax is if you exceed, again, $1 billion in net worth and or $100 million over 3 years consecutively, they are going to tax you 20% on your assets. I don't think this is the most thought out, but again, it is a proposal. It is not law just yet. Let's see here. And I wanted to show you this one other thing before I give you my total thoughts on this just yet. And I jumped a little bit ahead on this. But here, Biden to propose 20% tax aimed at billionaires, unrealized tax. I just explained to you unrealized tax. Unrealized tax is a tax on anything that's not sold. So again, realized tax is taxing things that are sold. So for example, let's say you have 1,000 shares of Apple stock, right? You do not pay tax on that until you sell it. So, and let's say you have 1,000 shares and it's worth $1 million, hypothetically, right? This is not a recommendation to buy or sell. This is for entertainment and educational purposes only, okay? And so this here, you have $1 million worth of Apple stock, you have 1,000 shares. Let's say you sell 500 shares, right? You sold $500,000 worth, right? You have to pay tax on whatever the gain is on that. Under this new law, under this new proposed bill legislation, you can have $1 million worth of stock. You have to sell it. You have $1 million worth of stock. You pay tax on it, whether you sell it or not. That really would put a whole wrinkle in the tax system. But I'll come back and talk about that. All right, so here it says President Joe Biden will propose a minimum, lowest level, lowest threshold of 20% tax rate that would hit both income and unrealized capital gains of U.S. households worth more than $100 million as part of his budget proposal to be released on Monday. The plan, called the billionaire minimum income tax, by the White House, represents the most aggressive proposal by the administration yet in Biden's effort to increase taxation on the wealthiest Americans. It's estimated to generate $3.6 billion in revenue over the next decade. Okay. And so in this article, there's a little fluff piece here where it says President Biden is a capitalist and believes that anyone should be able to become a millionaire or billionaire. The White House said in a statement. That's just to kind of soften the blow, because somebody out there is going to say he's a communist / socialist. All right. He also believes that it's wrong for America to have a tax code that results in America's wealthiest household paying a lower tax rate for working families. All right. So here it goes forward to say the minimum tax first reported by the Washington Post is similar to a proposal offered last year by Senator Democrats who's suggesting offsetting the cost of Biden's Build Back Better plan with a minimal tax that would apply to taxpayers whose net worth exceeded $1 billion or whose income exceeded $100 million over 3 consecutive years. All right. So under Biden's plan, household worth more than $100 million who did not already pay 20% tax on their so-called full income would be subject to the additional tax. The administration projects that more than half of revenues for that new payment would come from the nation's roughly 700 billionaires. All right. Skeptics include key Democrats like House Ways and Means Committee Chair Richard Neal. All right. Remember we talked about House Ways and Means last week, who has proposed instead an income tax surcharge on the most affluent Americans. Senator Joe Manchin, if y'all been paying attention to any of these politics, Joe Manchin is like the black sheep of all Democrats right now. Most Democrats really feel that Joe Manchin is a closet Republican. All right, so Senator Joe Manchin, a West Virginia Democrat who scuttled the Build Back Better legislation in December, has said he worries the plan is convoluted. All right, so there's a lot going on with this. In my opinion, there's a lot to talk about with this, and I don't know if it's going to pass, to be totally honest with you. But you can tell Democrats are definitely pushing for more taxes. And as I said before, this will have negative repercussions on the middle class if you really think about this, right? And the reason why I say this again, stock market works as an auction house, buyers and sellers. The people who buy, if you have more buyers in the stock market or with one any given stock, stocks go up. If you have more sellers on any given day, stocks go down. All right, that's just the benefit. I mean, not the benefit, that's just the reality of the situation. Now, here's the thing. If you're telling the wealthy who very much are heavily invested in not just stock, but also real estate, I'm sure this is going to come over to real estate, that they have to sell their assets in order to, if they have to pay taxes on their assets, whether they have sold them or not, that's going to create a lot of potential tax burden on folks, which would then come back to the marketplace because they're going to get rid of some of these assets. Also, it might create a cash problem for some of these billionaires because billionaires don't just walk around with $1 billion in cash, right? It's invested in other places. So what happens when a tax bill comes due? They have to sell their assets. That means they're going to be more sellers in the market. Now, a lot of people don't realize this, but a lot of our 401ks, a lot of our 401ks, a lot of our pension plans, even some of our insurance policies are invested into the stock market. Once you see that happen, once you see this go down, It's going to be a problem, right? Because many Americans that are looking to retire have their money invested in what? Pensions. They're going out of style, but they still a lot of money in pensions. A lot of Americans who are getting ready for retirement have their money invested in what? 401k plans, right? And so we're going to see a lot of those plans fall. So not just 20% tax, but also attacking the stock buybacks. Now, again, do I feel that there's a need of equality that should come about in the system? Yes, I do. But if the study says, if we're going back to the stock buybacks, if the study says that executives tend to sell 8 days before a stock buyback is announced, propose a law that says executives can buy or sell 6 months before, 6 months after a stock buyback, or there's some kind of penalty or fine. To me, that's a no-brainer, right? That's not hard to fathom, in my opinion. I mean, if you're in charge of the largest economy in the world, you would think that would be easy to come about, in my opinion. But maybe not. Maybe not. Also, with the whole unrealized gain versus realized gain, you don't want to disincentivize long-term investing, because that's what would happen. You will be disincentivizing long-term investing. That is the hallmark of American capitalism. And for all of you that say we don't like capitalism, fine. I'm not the channel for you. I'm a black capitalist. I think capitalism is great. I think capitalism is the best system that is here, that we have. Until something else comes up better, I don't know what else to do. Now, before you push back and you say capitalism sucks, I need you to go read the definitions of what capitalism are, what it really is, and what it really means. Because there's a difference. Many people complain about what we have now, and that is corporatism, where you have corporations taking over, dictating things. K Street down in Washington, which houses most of the lobbyists here, really go to bat for certain corporations to get certain laws pushed through. So what we have now is not really capitalism, it's more corporatism. But capitalism is fine, right? Capitalism is what makes the way for people with money to put their money at risk, right, into a business. Because if you don't put the money at risk, meaning that you could lose it all, we won't create jobs. We won't create opportunities for other investors, right? And so I don't think Biden's team is really thinking this thing all the way through. And if they were, I think they would create other restrictions around wealth, right? In terms of what they have right now, it wouldn't just be a tax on unrealized assets. You want to keep the tax around realized gains, but maybe you change some of the tax levels on capital gains. That's, there's a lot of different ways to skin a cat. It's not just one way. But again, this is just the first layer, the first rung of introducing a bill. And so it's going to change. It's going to change. And so I'm not going to get my hopes up on it. I usually don't like to talk about proposed bills because I know they're going to change. I know that's not the final outcome, but in the hopes to help us start thinking through these things a little bit better, I figured I would talk about it. All right. So as always, right, we have to do our daily motivation. Our daily motivation today is I am a magnet for money, right? I'm a magnet for money. I'm a magnet for money. And with all the negativity that's going on, I know we've been talking about Chris Rock. I know we've been talking about Will Smith, but it's very much in a negative light. So I always like to bring something positive here to talk about everything, to really, give us something to go forward with, right? I always tell y'all, life and death lies in the power of the tongue. And so we always have to keep speaking positivity throughout out our mouth, right? So today, y'all, we talked about the stock market rundown. Joe Biden's trying to kill the middle class, and our daily affirmation. As always, I appreciate you all to be here, right? I'm always humbled that you're here. So as I always say, continue to be great, always be loved, and continue to look for the light. Always continue to look for the light. All right, y'all, until the next time, I will see y'all tomorrow. Kamari Ellis out. That ends today's regular program.